Hello and welcome. Deal flow on the investment banking side has been slow in recent months and perhaps years. Let's understand how it's been going on the British India corridor. And joining us to speak about that is Sanjay Bhandarkar, Managing Director of NM Rothschild and Company in India. Sanjay, thank you very much for speaking with us. Let me ask you a couple of general questions. First of all, how are you seeing the overall deal flow from your point of view? And then we'll come to the British India corridor in a bit.
Look, in this current environment, I think the deal flow is fairly muted. It's, as everybody is aware, the kind of general economic environment hasn't really been very conducive to kind of making investments. So what we are seeing is a kind of a lot of demand for capital from Indian corporates and entities. So essentially, you're seeing a number of companies wanting to raise money, especially given the fact that the equity capital markets have been pretty much shut for a while, and a lot of people have maxed out on the amount of debt that they can raise. But the big challenge is really finding investors for in a lot of sectors where the need for capital is the most acute, especially when you look at areas like infrastructure, where or allied areas like construction, where the need for capital is most acute, but you're clearly seeing a dearth of investors who are at this point in time waiting for things to settle down before they decide to make investments into India. The other issue that we are seeing on the M&A side is again there is a lot of pipeline building up around people wanting to do deals from India, especially in the space of private equity owned companies, either majority owned or where private equity has had a minority stake for 6-7 years and looking for an exit, where the initial plan was an IPO, but that doesn't look feasible. So there are a number of entrepreneurs who are open now to doing controlled deals, but there again, the demand for deals is is very sporadic. It depends upon the sector, depends upon the nature of the company, but I think that's the other thing that we are seeing on the kind of deal front.
Right. Sanjay, you touched upon capital scarcity for infrastructure. Now, firms like yours are acting as a bridge between those who provide capital and those who need it. So how specifically are you seeing activity on that front, or deal flow for that matter?
Look, as far as other parts of the world are concerned, we're not in a situation where capital is freely available as it was in the, say, 2005 to early 2008 era. When there was a lot of capital sloshing around the world. But at the same time, we are in a situation where we seem to be slowly coming out of a significant capital crunch, which characterized the world economy from 2008 until 2010. So things are getting better slowly on the capital availability front. A lot more of the challenges that face India are India specific challenges. It's not so much the paucity of capital available globally, but it's really the need for enabling conditions to allow that capital to flow into India, in particular into sectors which require capital the most, which is where the biggest challenges are.
Right. You touched upon M&A as well. Now, some time ago, a few years ago, perhaps, we saw a lot of activity. We saw the JLR deal, the Chorus deal. We saw Birla's acquiring aluminum assets overseas. Now, what kind of trends are you seeing today? Is that changing?
I think by and large we're seeing outbound M&A being a bit muted, especially when it comes to what I'd call the non-resources sectors. So clearly the Indian oil companies are still looking aggressively to acquire assets overseas, as was evidenced recently by the transaction done by OVL and IOC. In Mozambique on the big oil field, and people are still looking for opportunities in coal and iron ore. But if you were to look at other sectors, industrial type of sectors, there the appetite is a lot more muted. Because there are far fewer balance sheets in India available today to support a big M&A deal. and B, obviously the global and kind of Indian environment being what it is, people are a lot more cautious before kind of attempting a big transaction. So I would expect the outbound M&A kind of trend to be muted. What we are seeing, at least in terms of activity levels, is a lot more action around inbound M&A deals, driven, as I said, by the fact that there's clearly a lot of need for Indian companies to kind of raise capital. But how many of those deals actually get done, we will have to wait and see.
Right. Sanjay, are you seeing any specific trends on the inbound side?
We are not really seeing a kind of industry or sector specific trend. The kind of deals that are coming to the market are more driven by the specific situations that kind of face a particular company. Whether there is a need for capital, or whether there is a need to provide an exit to a private equity investor, which leads to a deal kind of being contemplated, whether it's the entrepreneur deciding that he or she's had enough and kind of wants to, rather than leave the business behind for the next generation, would monetize and kind of leave cash. So we are seeing more company and shareholder specific issues that are driving deals, rather than an industry-wide trend that is kind of driving deals.
Right. So would you say that these deals are from a relative point of weakness compared to what we saw, or the kinds of deals we saw 4 or 5 years ago?
I wouldn't kind of call it a weakness. I think it's more kind of a symptom of the environment that we are in, and the specific circumstances that are kind of facing these companies. So that is there. I mean, to a large extent, the environment facing the companies 5, 6, 7 years ago was one of capital being available in plenty, most businesses doing well. So there was really a big hunger for growth across kind of large and mid-sized and even smaller companies. That has now changed to an environment where kind of growth has slowed down, profitability is affected, cash flows are tighter, debts are much higher. So obviously, and the capital that was raised previously now needs to kind of be given an exit. So there are very few companies who have the kind of flexibility to kind of focus on significant growth. A lot of others are kind of either facing challenges of kind of funding their existing balance sheet, or trying to find exit for some of the capital that was raised earlier. So that's the kind of phase in the corporate cycle that I think we find ourselves in.
So how are you seeing the asset management side of the business, particularly from an emerging markets or towards the emerging market basket?
We don't. Rothschilds is kind of is at least on the Asian side, we're not really kind of in asset management. So, right. So the Rothschild business in Asia is mostly global financial advisory, which is basically the investment banking side, and the private banking business. So right. So it's not really it's not something that I can kind of really comment on.
Let's come to the Indo-UK corridor. How does that corridor look to you today, particularly since the Euro economy and the UK economy in specific have now come out of recession?
India was in the last cycle. UK was a favored destination for Indian companies when it came to doing outbound acquisitions. Just given the kind of open nature of the economy, London being a kind of big global hub and both of travel and finance, and the kind of comfort and familiarity with the language and the culture. And I think that does remain. Obviously, the appetite for outbound M&A in India is kind of much less than what it was 5 years ago. On the kind of inbound side, again, I think there is one is clearly Vodafone has and continues to make a kind of big investment into India, and that's a pretty big this thing. But I think there are other companies who are also kind of trying to develop a presence here. And from what I hear, there are lots of kind of mid-sized and smaller companies trying to kind of develop a presence in India to try and kind of get a share of the Indian market for their products and services. So I mean, I don't have any kind of specific statistics at hand, but anecdotally, there clearly seems to be a kind of a deepening of engagement, possibly below the radar. I mean, you don't see the kind of big bang M&A deals that kind of make the headlines of newspapers as frequently. But the sense I have is that there's probably a kind of a much more broad-based and deeper engagement that's happening kind of behind beneath the radar. And clearly the UK government and the kind of high commissions and others have kind of clearly stepped up the effort considerably in the last 3-4 years to kind of champion this engagement both with the Indian government and the Indian business community. So I think that is quite positive.
Sanjay, do you have any thoughts on how this corridor can be strengthened either from the India or the UK side, particularly from a policy and policy intervention point of view?
I think frankly on the UK side, I think the UK has kind of a lot of experience of having infrastructure assets owned in the private sector. With the privatizations of the 80s and 90s and kind of the other kind of initiatives that were carried on thereafter. And I think that's an area which India will have to frankly kind of get better at, the ability to really attract private capital in a kind of sustainable manner to develop our infrastructure. And my sense is there's possibly a great scope to kind of do some fairly intensive knowledge sharing, so as to ensure that the Indian system can kind of take advantage of the kind of lessons and learnings that UK has had over the last 20-25 years, and can kind of take on board some of those lessons and kind of use them for the Indian kind of situation. So I think that is one. And obviously going forward, as things kind of stabilize in India, obviously the ability to kind of use London, which is a global kind of hub for capital, to use that to maybe kind of channelize some of those capital flows into India, especially into the sectors that kind of most need it. But that's probably kind of more a medium term kind of a development, I guess.
So let's talk about India now. So what are your thoughts on what can be done to improve the economic and business climate?
From our point of view as an M&A banker, I think, look, I think the first and foremost, it would be very helpful to kind of have some fairly clear and kind of consistent policies. Which I think is kind of one area where there has been so much back and forth over the last 3-4 years that has kind of clearly created this kind of sense of confusion and instability in the minds of investors. So I think anything that can be done to kind of overcome that perception and kind of make India seem a much more stable investment destination would be extremely welcome. And clearly the government is kind of trying hard with kind of efforts over the last 6-7 months to kind of try and kind of focus on this whole issue of trying to change perceptions. But that, I think it will take some time for it to happen.
So is there an India wish list of sorts that you have, Sanjay?
Not really, nothing specifically from kind of but just looking at it from a pure kind of Rothschild angle. Nothing specific to us, and obviously as I said, we hope that the kind of economic climate and the perception of India as an investment destination kind of improves, because that will obviously have a big impact on our business. But that's more kind of general wish list rather than something very specific for Rothschild.
Sanjay Bhandarkar, thank you very much for speaking with us.